Welcome to the panel on cash, escrow, and closing the deal, how to effectively manage failed and successful offerings. Probably should do successful first.
There is no such thing as fail.
The goal of this panel is to discuss what happens after an investor subscribes, money movement, escrow, and post-close communication with your investors. So with that, I will first introduce myself. I'm Lindsay Harkness. I'm the Director of Operations at North Capital Private Securities. And now I will ask each of my panel members to briefly introduce themselves. Laura, you want to start?
Laura Dager, Senior Vice President and National Deposit Sales Director. My colleague, Jim Hendricks, who is here with me today, is Treasury Management Services Director. We are here representing Tri-State Capital Bank. Tri-State is a $5 billion bank headquartered in Pittsburgh, PA. We conduct business through two channels. One is our commercial banking, where we provide commercial real estate, commercial and industrial and equipment finance lending across the regional footprint of our bank, which is Pennsylvania, Ohio, New Jersey, and New York. The other channel where Jim and I reside is in our private banking channel. And there we provide deposit gathering and lending to broker-dealers, to high net worth individuals who are introduced to us through financial advisor intermediaries that custody their assets on LPL, on Schwab, on TD institutional, custodians like that, and family offices. We are here today to talk about Tri-State Capital's role as the escrow bank for all of the private offerings that flow through North Capital. So we're delighted to be here.
I'm Steve Drew. I'm VP of Product at CrowdStreet. I've been with CrowdStreet since the beginning. So in any small startup, you wear many hats. And so I started out as VP of Marketing and VP of Product and VP of Services and VP of Engineering and so forth. And so I've been part of many different roles. And through that time, I've helped grow what is now CrowdStreet and architect and develop the product. So CrowdStreet is an online commercial real estate portal that is used for primarily private equity. We have two sides of our business, one that is focused really on our own investor members who are directly investing in commercial real estate through sponsor offerings. The other side is to take the exact same technical solution, sell it as a white label solution to some of the largest commercial real estate developers in the world and run their own investment portals through that. We've also just started a capital division called CrowdStreet Capital. So we are moving into the advisory space and will soon be announcing the delivery of a fund. So we have both advisory services as well as a technology platform. The reason that I'm represented on this board is that we are using Transact API as a part of our transaction center to do AML KYC. We're also using it for online ACH, and we are also using the escrow services as part of both the broker-dealer solution as well as a pass-through escrow for the ACH product.
I'm Joan Drome, and I'm with ComputerShare. I'm the Senior Product Manager for the Private Markets Group. ComputerShare is a stock transfer agent, and I think we're probably the largest stock transfer agent in the world. The company is Australian. However, they invaded the U.S. around about 2000, and we're the largest transfer agent in the United States. We manage about 25 million shareholder records for around about 6,000 companies. It's a mix of private and public. Heavily in the public space, but we started our private markets group 3 years ago, and like you, I've worn a lot of hats because we were a startup within the company. So although I'm technically the VP of product, I've done business development, sat through contract negotiations, I do technology stuff, chief cook, bottle washer, and all that fun stuff. So we've grown our private markets business quite a bit, and the suite of services that we provide is not radically different from what we do on the public side. What I do find is different is that the issuers in this space tend to be more novice issuers that are less well-versed in both securities offerings in general and dealing with investors on a large-scale basis. So that's been an interesting journey. We've had a lot of fun and met some very interesting companies along the way, including North Capital, who I've now known for about 3 years. We were introduced by a mutual friend who used to be head of corporate finance at the SEC. So we are the people that help keep you all out of orange jumpsuits if you're a sponsor.
That's funny, because I believe we're the people that keep them out of orange jumpsuits.
Yes.
I'm Stephanie Holt. I am the Chief Operating Officer and Chief Financial Officer of the North Capital companies, which include a securities broker-dealer, a technology company, an RIA, and various other things, and no doubt more to come.
Thank you all. So let's just jump right in and start with escrow. And anybody who wants to jump in on this one, feel free. Why is escrow a benefit to investors? What are some pros and cons of an issuer or a sponsor using an escrow account?
I can start with that one. So escrow is an interesting thing because what happens is it both protects investors, which as a broker-dealer is our main goal in everything that we do, and is also good for issuers. It protects investors because on the occasion that an escrow does not get complete, a deal doesn't get completed, and if an investor's money is in escrow versus an escrow's money has been sent directly to an issuer, you can be sure that the issuer is not going to take that money and go to the Bahamas. We have a legal obligation that if a deal fails, the money gets returned to the investor, to the account that they invested from, and so there's a level of safety for them. As an issuer, there's also a variety of advantages, and most importantly, that while you are doing your regulatory compliance on an issuer, your KYC, AML, bad actor checks, you can concurrently have their money sitting in a third-party escrow rather than waiting until that entire process is complete before you pull their money into the issuer. So in terms of ease of use for the issuer, or ease of use for the issuer and ease of use for the investor, it's actually a benefit because everything can happen very quickly while any other type of regulatory stuff is taking place simultaneously rather than it being a long and drawn out process.
And I would just add to that, as the escrow bank, working with North Capital as the escrow agent, there are multiple layers of protection and safeguarding for both the investor and the issuer. We're both looking out to make sure that the funds are not commingled, that every dollar is accounted for and deposited into an account for the benefit of the investor, and we follow that through daily through the entire length of the period. So it's just added protection that is built into it for the issuer and the investor.
So as I mentioned, we're using the North Capital Escrow Services in two ways. One is the traditional way where the money is held until the sponsor releases the funds. We're also using it as a pass-through account for our ACH product. So rather than holding the money until it's released, the intent is to store it as a temporary account and then release those funds as quickly as possible. So that it's not a traditional escrow service, but it is actually the same North Capital escrow process behind the scenes. I would say on the escrow side, we're using that when the broker-dealer is North Capital, and it is a requirement that the funds go through North Capital. The benefit, I would say, to our investors is that the escrow really allows you to accelerate through the process. Not only does it provide you with the security, so if anything does go poorly, it allows sponsors to have the ability to move the entire process through and not gate it at certain points. So for example, KBS, one of our customers, has decided not to delay the investment process at the point that documents are submitted, or at the point that the offer is submitted. They go entirely through the process, and if there is some problem, they can unwind the funds since the money is held in escrow. So what it does is it allows the investor to have as seamless and as efficient a process as possible.
I don't think I have anything to add to that other than after 30 plus years in the securities business, I'm a fan of escrow because there is no commingling. You can't spend the money if you don't have your hands on it, as issuers might want to do if they're assuming that an offering will go forward, and there are a host of reasons why it might not and why you might come under a rescission order. So it's just a better level of protection all around. I mean, I've seen offerings where that didn't happen, but by and large, I just think it's a better method.
Do you have a quick example of sometime when that didn't happen?
I have seen a couple of situations where, because of factors outside of the raising of the capital, a company was told that they would have to rescind the offering. So if you haven't gotten your hands on the funds, assuming that your project is going to go forward, there's always that temptation to use that money to defray some of your initial outlay of costs, because anyone that's worked in real estate for any length of time will tell you there's always a point where someone has their hand out looking for money for something that you're doing relative to the project. So it's easy to do that if you have your hands on the money. It's not going to happen if it's held in escrow.
Great, thank you. And then kind of along the same lines, what are some of the roadblocks or barriers to entry that you've encountered when talking to issuers about using escrow for their offerings?
Well, the main one is that there's a fee that goes with escrow, right? So, issuers, particularly on the smaller deals for startups, are very careful about how they want to spend their money and what they want to do. And it's hard for an issuer to understand that something could go wrong, right? By the very definition, entrepreneurs and people who are starting companies are optimistic, and they think they're, I can't tell you how many people every day come and say, we have something, and we definitely know, even though we don't really have a product and don't really have any revenue, that we're definitely worth $100 million, and we're not going to have any problem raising this $4 or $5 million that we need. So we don't need an escrow because we're for sure going to raise the money. It's for sure going to go well, and the deal is going to go through. So there's a little bit of a, telling somebody their baby's potentially ugly, and that maybe it won't go through, and not only do, and it's almost sometimes a little bit hurtful to them to hear that because they're, as entrepreneurs, and we're that way too, quite frankly, as entrepreneurs, you have to know that things are going to go well to be able to get up in the morning and do business every day. And so someone telling you, well, there's another side to that coin, you have to spend money and you have to sort of think, well, maybe it's not going to work, is sometimes a hard pill to swallow.
I also think that companies, startup people in particular, as you said, they're optimistic, they have a wonderful thing, they're excited about it. They're also very careful about how they're spending their money. But there's a certain level of preparation that you need to mentally engage in before you take on doing something like that. And you need to come to grips with what your costs are going to be. Last time I looked, no one woke up in the morning saying, I think I'm going to run out and buy a private placement today. That is not what people dream about. That is not what they wake up to do in the morning. So you're going to have marketing costs, you're going to have compliance costs, you're going to have legal fees, you're going to have all the costs for everyone. And in having this discussion over the past 3 years with innumerable people, I have on occasion actually said, just because you want it to be cheaper doesn't mean it actually is. It's just not. Because everyone in this whole process is performing certain tasks, and there's both a cost and an expected profitability factor for everyone engaged in the process. So when you go forth with an investment offering to the not-so-general public, in the case of most of these situations, you just need to be prepared for the fact that you're going to have accounting and legal and service provider costs, and that's simply a fact. And if you don't have the wherewithal to do that, you may have to have Plan B for a while until you acquire the wherewithal.
And all the more reason to join forces with a broker-dealer who is well-prepared, knowledgeable, has a wealth of resources to offer to the issuer to help them find the most efficient and cost-effective way to bring their offering to bear.
To kind of force people a bit to the compliance end of things.
Sure, be accountable for what's happening.
That's another big realization, I think. we deal with a fair amount of operating companies in the tech space, and the techie people are prone to think, well, the technology can do all this wonderful stuff, so we can go off and do all this wonderful stuff. And sometimes you have to say, as I'm sure you guys have said a lot, not so fast. Just because you can doesn't mean that you're allowed to or that you should, because there are other considerations. And sometimes people don't like hearing that. It is sort of like telling them their baby's ugly.
So I would say that one of the main barriers to entry is probably awareness, that a smaller operator just isn't aware that there is a better way to do this. Larger operators definitely have that exposure, especially operators that have worked through a broker-dealer, since it's generally a requirement that they do that. But with the changes in regulations, you don't often have to go through a broker-dealer, so a lot of the smaller vendors or smaller sponsors just don't know that they should do that. I don't think that it's cost so much. I think that if you were actually to do an ROI calculation and say what is the true cost relative to the cost savings that you get by the efficiency of being able to move the capital very easily and having visibility into the funds, it's probably going to net out, especially when there is a problem and you have to reverse the funds. That effort is can be very challenging, and it's very easy with an escrow. So I think from a cost perspective, if you net it out, it's probably not that bad. But that certainly is the knee-jerk reaction. I have to pay for something incrementally, but it's probably not true in the true business sense.
So moving on a little bit to another service type. Joan, what are some common pitfalls you encounter when you're onboarding a new company to use your transfer agent services?
One of the bigger challenges is the transfer agent is sometimes the last to know what's going on. So coordinating services is really useful. But the biggest problem is usually when someone's engaged in this type of offering and when they're running a company, there are other calls on their time and other priorities. So if there's not a particular deadline by which you must have a transfer agent, sometimes we go to the back of the bus and we end up being the last thing on the to-do list. And that's just a fact. It happens a lot. One of the things that we do in our organization is we assign an onboarding project manager, because there's essentially two aspects. There's collecting all the lovely legal documents to support the appointment. There's a couple of IRS forms, bylaws, articles of incorporation, board resolution, blah, 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 fun stuff like that. So if you have, 18 things on your to-do list today, that might go to the bottom of your list if any of those things look like it will sort of be a pain for you to acquire that day. So you might not get to it, and it might take a little time. So we assign the onboarding project manager, and project managers, in my experience, are really, really qualified naggers, and they're really good at it. It's a required skill along with stalking. It works really well, especially if they do it, professionally and gently. We have a few champion stalkers on that team, and they need to be, because it's very much you have to check all those boxes, and concurrently with that, they're managing importing the data, usually from someone like CrowdStreet or North Capital, whoever's the placement agent. We have a few different formats for that, depending upon the needs that the issuer has in terms of what kind of data they're going to manage. So one of the other things that's a little challenging is it's helpful for us to learn what the company needs and how they expect to manage their data. Like, one of the common things we get for offerings in the private group is people want to check whether the investors are accredited or not. And by check, I mean check that off as a flag on the account. So they know if they have 2,000 investors, 1,500 of them are accredited, and maybe 500 are not. And that lets them manage and use that information going forward because it's stored on our system. So there's a learning curve, and one of the other fun encounters is usually assumptions that people have made about what we're going to be doing. Oh, did I tell you that we have profits interests as well? You guys can do that too, right? And that will come up at the 11th hour. Or it's we have these options over here somewhere. And did you want us to be keeping them? Or we have warrants. Suddenly all these things come out of the woodwork when you start going through, because we have a pretty comprehensive questionnaire, because we've had a variety of unpleasant surprises over the years. So we like to say, let's go through all of this, even though plenty of it might not apply to you. we need to know what your expectations are, and we need to know what you've got so that we can effectively manage the information and put it into formats that will be useful for you. Like, a lot of times there's founder's stock. It's like, well, do you want to make those people tagged differently so that you can extract those if you need to send special Christmas cards to the 12 people that have founder's stock? And people do want stuff like that. So there's a bit of learning curve, both for us and the issuers. And in the private market space, there are a lot of novice issuers, and most people have been keeping stuff on spreadsheets or, you know, maybe some other little homegrown thing. Sometimes getting to the bottom of the history of the data is no fun. Sometimes you get things in and it'll have strike-through font. And you're like, what does that actually mean? What happened to those? Oh, those certificates were canceled. Do you want us to store that history? We need the date they were canceled and why they were canceled. Or if you did, you know, whatever, a stock split, or you did a forward conversion of some sort. You know, it's like, do you want the history? We can take it. It just needs to be accurate. And then balancing the books is always fun too, because we make you sign in blood that these are what you're turning over to us, and it's this many shares, and that's what we're taking on, and you can't come back later and go, oh, we forgot about this other million shares, which we actually had happen once. 1.7 million, actually. Just like, yeah, we didn't give you that. It's like, okay, that's great.
I'm sure that's an ever-evolving process to...
Well, you know,
to get the information that you need.
The list of
from
questions
your
sometimes gets longer for
Yeah.
exactly reasons like that.
Yeah.
So.
You know, and it's interesting, as a technology provider, and, you know, we try to explain to people, we spend our whole day explaining to people why the, you know, technology solution is better, why, you know, it's better to be able to sign investor docs online and do these variety of things, and then people want us to do things, and because of certain regulations, maybe we can't. When you're on the other side, and I'm saying, why isn't this process more automated? What do you mean I have to scan something, print something, wet sign it, scan it back to you? Like, why is that? It's very easy when you're on the side of, oh yes, this is what you have to do to dig your feet in. But when you're on the other side and they're saying, this is what you have to do to meet our regulatory requirements, it's much, much harder.
Steve, since CrowdStreet operates a platform and works with investors as well as licenses technology to issuers, could you share some of the ways that CrowdStreet is using technology and integration partnerships to simplify investment processors for both investors and sponsors?
Sure. So we have a transaction center that's used for online investing. And in that process, we've integrated with multiple partners. So we've integrated with DocuSign for electronic signing. We've integrated with Verify Investor for accredited investor verification. We've integrated with North Capital, as I mentioned, for broker-dealer services, for online ACH, for escrow services, and AML, KYC, suitability reviews, and so forth. So that's gotten the process considerably better, but every day we always find there's something else that we could do. And so right now, a major change in the space is the evolution of self-directed IRAs for the purpose of investing in alternative assets. And so this is a ripe source of capital that is an antiquated process that's very different for each custodian. And it's another way that we can bring simplification to the process by solving for a common way of using your self-directed IRA. We're looking for other ways that we could move from the document signing process today, which is very much a document-oriented process, and even with DocuSign, you're using a PDF that's marked up. I'd love to move to a model that's truly digital. So you have a digital form, and you're capturing data, and you're transferring data as opposed to moving docs. So we'll see that in the near future. I think you'll also see a move towards an evolution in the way shares are tracked. And so today, the traditional model with the transfer agent is working well. You'll also see a movement towards using blockchain and so forth as a way of creating equities that are traded and shared through that. I think that's going to be an interesting evolution that we will certainly be part of. On the funding side, as I mentioned, we've solved so far for the payment side, so paying for your offering. On the sponsor side, there's also the electronic payment of the distribution that could be done electronically as well. there are other services that we could create in the back end. But what we're trying to do is solve for, ultimately from a CrowdStreet perspective, we've put the bullseye on the investor, because we feel that there is a virtuous cycle that gets created by having really great and happy investors who will come back and invest again, which will allow deals to fund quicker and quicker, which will allow better and better sponsors to come to our marketplace, which creates this virtuous cycle. So when we put the bullseye on the investor first, for example, getting distribution information posted in the system, while we may provide services to the sponsor that makes that more efficient, ultimately, if the sponsor is posting distributions into the product, the portfolio is more reflective of their actual portfolio. It has real and uptime value, real and uptime up-to-date information, so the investor benefits from the portfolio. So while we're certainly solving for both the investor and the sponsor, what we try and do is make it so that the resulting solution is optimized for the investor.
And just quickly, if you could talk a little bit about maybe what some of your customers' expectations are after the deal closes from you guys.
From the way they use the product, or the way? Just
kind of the ongoing relationship, what they expect from
Sure.
you after the close.
So these are generally liquid assets. These are 5-year holds for the most part. So there is post-funding, there's a 5-year period in which the sponsor is maintaining investor relations by uploading distributions, posting K-1s, and so forth. So that is all performed within the CrowdStreet solution up until divestiture. The distributions themselves could either be imported into the product or they could be generated. Waterfalls are created within the product. The next step would be for us to add services so that those distributions could be paid directly. So the expectation from the sponsor is that they have a solution not only for fundraising, but also for maintaining investor relations. And the beauty of the CrowdStreet platform is, since it does solve for both, it actually allows for something to happen at the divestiture process where you could reinvest back into a product that's currently funding. It also creates, again, a virtuous cycle where when the investor goes in to check their K-1s, download their K-1s, get their distributions and so forth, it creates a ripe opportunity for marketing your current deal. So they're already coming back to get what they want to get. They can check out the deals that are being offered. We can also do distribution reinvestments. So as you're paid out, drip shares could be generated with those distributions that go back into a fund, for example, that's still fundraising. And you can reinvest in the same investment through that process.
Laura, how does having a special account at Tri-State help protect investors?
I would say the best example of that is the relationship we have here with North Capital. When we met Jim Dowd, it was at an industry conference, and what was of interest to Jim when he was looking for a bank that could take some regulatorily required deposits, we knew what he was talking about. We do it all the time. So the experience that a bank like Tri-State can lend to the situation from the start gives some ease and comfort of, okay, these folks know what they're doing. And with that attention to compliance and regulatory requirements, it just facilitates the whole process from the issuer to the agent to the investor. So working with a bank like Tri-State, where we have the components lined up front and can kind of guide the process, is helpful. In addition to that, I think what was most helpful to Stephanie was we consulted her. So a good partner in this bank role should listen to the needs of the escrow agent. What's not working currently? What can we help to improve for the entire process to work more efficiently? So through our treasury management group, we were able to customize reporting that helped to, again, ensure the safeguarding of that lack of commingling, that everybody's allotment was properly accounted for down to the penny every day through the process, both incoming and outgoing. We worked with Stephanie and group to facilitate the whole ACH processing that allows the funds to come in and be dispersed. So it's really that attention to what does the client need to make a better client experience and make the process more efficient, and in doing so, make it more comfortable that we're solving and satisfying any regulatory needs that are out there from anybody's perspective.
Particularly in a regulated environment, your tendency would be, oh, I'm going to go with a name bank. I'm going to go with one of the bigger banks that everyone knows. And what we found is that we weren't getting the service, and frankly, we were never able to get to the people with the knowledge of our specialty little area. And so finding a bank that, for the most part, specialized in broker-dealers, to Laura's point, that we could sort of speak the same language and then say, these are our pain points. This is what I'm looking for. This is what my ideal situation looked like. Finding a smaller, hungrier bank who, we wouldn't be one of, 100 million customers and a tiny customer who was basically getting, their brand new person put on our account who had no regulatory experience, has been a vast improvement for us, and I think has been one of the things that let us add so many new services so quickly while making our regulators happy, in addition, making the bank regulators happy, right? Because you're sort of serving two different people in that role, because we have our regulations and then they also have their regulations, and so you have to make it work for everyone.
And then we've talked a lot about why an escrow account is beneficial for investors. Stephanie, what does it look like when an offering fails? What does that process look like?
And so once you get past the point where everyone has realized that the offering has failed, because sometimes that takes a little bit of time. So for whatever reason, the contingencies weren't met, the offering has failed. Steve spoke about it before. When in escrow, it's really easy because we have a list of investors, we have all their banking information. Because of anti-money laundering issues, we need to make sure money's going back to the exact same account. We have specific regulatory requirements where that's concerned too. So, and additionally for us, since a lot of it's automated, an offer can fail and we can sometimes within 24 hours get all of the investor money back and close the door on that. Whereas issuers themselves would, if they had taken the money without going to escrow, to your point, if they still have the money, which you would hope they do, all of that information they don't have, right? So then so it's harder for the investor, it's harder for the issuer, it's more time consuming, and so having an escrow, as sad as it is when they do fail, they periodically do, and it makes it very straightforward getting the money back to the investors.
It's also very auditable and trackable,
Right.
which is not the case if it's been handled internally. You don't know if the same department's been processing the payments. As you say, they may not have all the information, and returning the money could sort of, it will just be ugly.
Can I just ask a question? Is there a time constraint involved from your end to make sure that money gets back out?
So we have internal service level agreements with people that will do it within X amount of days, and then we have, internal metrics that we try to do it. You don't want your returns on the back burner because frankly, from our situation, because of the way our business runs, we deal with one portal or one issuer. If there's 50 people wondering where their returns are, that's 50 times as many calls for us. Yeah. So frankly, it behooves us not at all to hold the money. So, we really try to turn them around within 24 hours. We same day ACH out a lot of the returns, so it's happening very, very quickly. International is a little bit more complicated. We just have to get wires set up and things like that, and sometimes there's a DocuSign process involved, but it's a matter of days that we turn that around.
So all the more reason to have a very efficient process.
Exactly.
Okay, I think that wraps up our panel. Thank you to my panelists for joining me today.
Thank you.
Thanks
for being such a lovely moderator.
Oh, you're too kind. Thank you.